All right, so we're going to talk about how to invest your Fidelity HSA. All the investment firms should be pretty similar with how you can invest your health savings account into the stock market. And this is something you want to do so you can take advantage of stock market gains. So first off, we're going to set our cash target. You're going to want to keep some of your HSA in cash to pay for like medical expenses. So let's take a look here. So you'll see here that about an average amount for an individual is $500, and for a family is $3,150. So I'm an individual; I don't have a family, so I'm just going to put $500 and just have like $500 in cash at all times. You can put whatever you want. I'm going to just put 500. So there's going to be some disclosures. We're setting a cash target right now, and then you're going to want to pick different investment approaches. So there's some descriptions here. I'm going to go with model portfolio. I'm going to want an aggressive strategy because I'm relatively young, so I'm going to want just about everything in the stock market. So if you take a look, there's different portfolio layouts. So if we look at this, yellow is short term. It's going to be more liquid. Blues are going to be like stocks. Those are going to be less liquid. So if you need that money in the next like year or two, don't put it in stocks. Keep it in like very liquid, I mean, if you need the money anytime soon, I probably wouldn't be investing it into, stocks and bonds and stuff like that. I would just be keeping it all in cash. So I'm going to go with like the most aggressive strategy, which is 85% stocks. Ideally, I would want to just be 100% stocks because I have, decades before I retire. So I have time. Now I'm going to advise you to keep your stuff in passive investments. I don't believe in actively traded vehicles. I don't believe they're worth the money that they charge. I believe, you just want an index fund. You just want like a basket with a piece of 500 different of the top companies. Like you really do not need to be paying Wall Street to gamble with your money. I'm not a financial advisor. So, I mean, you do what you want. So you can see that like Fidelity has a $500 index fund. I would be fine with almost putting 100% in there. But I do like some international exposure. We've seen how people have gotten killed in the bond market, and bonds have just not performed like with this high interest rate environment. Emerging markets, that's a little riskier. Small caps, I like small caps. Mid caps, I like mid caps. That's fine. Okay. I like stocks. I like equity. Automatic investing, like once you go past your like cash reserves, then you'll want the system to automatically like invest that extra money. So for me, I want $500 in cash at all times. Everything above $500 will get invested based on the distribution or like the settings I put. That's fine. And then you're going to set an investment trigger. So for me, anything over $500 will get invested. That's great. And then how do you want your cash reserves? This FDRXX, Fidelity Government Cash Reserves, is basically cash. You're going to earn maybe a little bit of interest, probably a couple basis points, like less than 1%, much less than 1%. That's fine. I don't know for sure, but again, I'm not a financial advisor. You shouldn't construe this as financial advice. I'm a financial analyst, not a financial advisor. I'm not qualified or licensed to give financial advice.